What's going on, guys, and welcome back to another very exciting video. This one is very interesting because we are going to be taking a look at these big tech companies and how many employees they actually have and how that's grown over the last kind of 5 years specifically. So it's very interesting when we look at some of these firms. So we are specifically going to be looking at Alphabet or Google, Meta, Amazon, Apple, and Microsoft. So all the really big, huge companies in the market. And basically there's some very interesting data when you look at some of these companies. Some have seen astronomical growth over the last 5 years. And then there's one that sticks out that has had very good stock appreciation, but hasn't really increased its number of employees in a very significant way. So at the end of this video, we are going to rank these companies. I'm going to rank them in my opinion of who I think basically could have layoffs coming in the near future, either additional layoffs or basically just be starting layoffs. So I hope you enjoyed the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Google's chart. So what we're specifically going to be looking at is the last 5 years. So 2017 kind of on, and we can see here that is January of 2017. And over that time period from 2017 until now, we can see that we've seen about 135% growth in the stock price. What's very interesting is 2017, the stock really traded up and we can see it kind of trading around $60. But then 2018 all the way through to 2020, that the stock basically traded sideways. It was trading around $60 here, kind of towards the bottom of the market, which obviously we had that huge downward move at the start of 2020. But then we've had a huge, again, upward move over the last 2 years. And then again, a little bit of a retracement over the last kind of 6 to 8 months. So very interesting, just important to note how the stock has moved compared to where their employee count has moved. Here we have Google's numbers in terms of their employees. And what we could see is a very interesting trend that over the last 5 years, they have increased their numbers in a very significant way. So 2017, they were sitting at 80,000 employees. Now they're sitting at 156,000. So they have almost doubled up on their employees over the last 5 years. And that's basically a 20,000, 20,000, 15, 20,000. So they've just been adding almost 20,000 employees a year for the last 5 years. What's very interesting though is when we jump back and look at 2012. So 2012, they actually went from 53,000 all the way down to 47,000 and then had a small increase again back to 53,000. So they did some basically headcount reduction here in 2012 to 2013. And what I wanted to jump back and take a look at is the stock price over that time period. So we could see 2012, you kind of have starting in here. So by the end of the year, we could see kind of right in here, that's where the stock price was at. And then if we take that and go over the year of 2013, we can actually see that when they were reducing their headcount, the stock actually went up by almost 60%. So what I wanted to get at there is that just because a stock or a company is reducing their number of employees, that doesn't mean they're necessarily in a bad position. Oftentimes the market is going to see it as a positive thing when there are layoffs because it's basically the company saying, hey, we overhired, we have too much cost right now, we need to reduce our overhead and get our numbers more in line. So basically, it's oftentimes seen by a good thing by the overall market. So with a lot of those details out of the way, I'm going to start flying through some of the rest of these because they are interesting to look at, but it's not as important. I want to get to the end of this video and take a look at basically the broader trend that we're seeing amongst these companies. So what we can do again here is take January of 2017 and go all the way out to now. And Meta is a very interesting case because they're actually down 12%. So if you bought Meta stock 5 years ago, you are actually down 12.3%, which is absolutely insane to think about with how much growth this company has gone through. So again, a lot of basically just trading sideways. They've had huge run-ups, but then they've also had major crashes. So overall, obviously this year they have been hurt in a very massive way. But Meta is kind of a stock that is in some sort of a transition phase. So they're kind of transitioning actually back to growth. And what they've done over the last 5 years is also absolutely insane in terms of the number of employees that they've added. So they've gone from 25,000 that we could see here in 2017 all the way to 71,000, which is low compared to some of these other employees, right? We just saw Google and they had a number of 156,000 employees. So they are at half of that. But, in terms of the amount of growth that they've seen seen in their employee count over the last 5 years, that is absolutely insane. And we'll get to the numbers at the very end, but very interesting again that they have grown this much. And it's just important when we're looking at these numbers to think about the business overall, right? What has Meta done to their business that, warrants adding 50,000 employees to their employee count? So just interesting. Again, keep that in mind when you're thinking about these numbers. So here we have Amazon stock, and we can go again from 2017. So over the last 5 years, they've grown similar to Google. We can see it's around 125%. So a little bit less than Google, but overall they have a very similar trend. 2017 and kind of all the way to 2018, there was a lot of growth in the stock. And then kind of towards the middle-ish of 2018 till all the way in 2020, the stock really traded sideways. And then again, another huge run up over the last kind of year or so. And then obviously a lot of big sell-off throughout the last 8 months. So a lot of these stocks are in indexes, so they trade, fairly similar to each other. And then obviously with them all being big tech, they're also going to, follow similar trends. Amazon is a very, very interesting case though, because they have had a significant amount of growth in terms of their business. Overall, they've acquired a lot of businesses. They've done a lot of different things. They've built out a ton of warehouses over the last 5 years. And we can see that their number of employees has gone astronomically high. So they are sitting at, in 2017, they were sitting at 566,000 employees. And then by 2021, they were at 1.6 million employees. So absolutely insane growth there as well from Amazon in terms of their number of employees. And obviously they have a lot different workforce than a lot of these other companies. That's something that's important to note, right? As they build out more warehouses, they're going to have a lot more employees that are kind of lower pay rate employees, but are contributing, directly to how they deliver packages and how they get packages, into boxes and whatever it may be. So overall, a little bit different of a case here. Obviously, they have significantly more employees. I mean, almost 10x the number of employees that Google had. So very, very interesting, though, to look at the amount of growth that they've experienced, just in the last 3 years, how much growth they've experienced for the number of employees that they've had. This is where things get very, very interesting. So here we are looking at Apple stock, and Apple, we can go back again to January of 2017. So looking at the last 5 years. And over the last 5 years, they have grown almost 400% in terms of their stock price. So this is absolutely insane movement. Apple has been just an amazing company over the last 5 years. And if you invested, 5, 10, even 15 years ago, even better, because you've seen just crazy amounts of growth. We can see 113, almost 114,000% growth all time. So absolutely insane. Let's jump over and take a look at their employees though, because that's actually where it gets a little even more interesting. Here is where things get very interesting, because Apple has clearly had, by far out of all the companies that we've looked at so far, the best returns in terms of their stock price. And when we look at the number of employees, you'd kind of expect them, to be growing the number of employees in a significant way, right? Because they are clearly growing the company, growing the business in a major way, which is reflected in their stock price. But overall, their number of employees has only been grown by about 5% year over year for the last 5 years. We can see in 2017, they were sitting at 123,000 employees. And now in 2022, they were sitting at 164,000 employees. So not very significant growth there. And I think there's a couple of reasons for that. I think one, obviously the business has stabilized off in the last few years. And then two, they haven't had a huge focus on growth projects. And the growth projects that they have focused on, they have really focused on using their workforce in a very efficient manner, right? They aren't adding significant headcount to try and develop headsets for VR. They didn't add a significant workforce when they started, looking into autonomous driving and electric vehicles and things like that. They're kind of very focused on their core business and doing that very, very well. And the last one we have up here is Microsoft. So Microsoft, again, if we go back to 2017, we can see that over the last 5 years, they have grown almost 300%. So almost to Apple, but not quite there, and significantly better than Google, Amazon, and definitely definitely better than Meta. Meta is in a very, bad shape in terms of their last 5 years. So overall, a very good graph here and very good price trend that we've seen. They have just had consistent upward movement. So this is one that kind of differs from, the Amazons and the Googles, where they have consistently gone up. They haven't really seen that sideways movement that we saw, in 2018 from a couple of those other stocks, 2018 all the way into 2020. They have had a lot more, consistent growth over the last 5 years. Microsoft is another one that has added a fairly significant number of employees over the last 5 years. We could see here in 2017, they were sitting at 124,000. And now in 2022, they were sitting at 220,000. So almost 100,000 employees added over the last 5 years. And specifically over the last year and a half, we can see that they've added 40,000 employees. So they went from 180,000 employees to 220,000 employees. So absolutely insane move there. Obviously, the stock price has been in relatively good shape over the last 5 years. It was around, 200 to 300% return there. But 40,000 employees in a single year seems like a lot of employee growth. They are competing directly with Amazon and Google in the cloud space and trying to be the number one player in that space. But it's hard to justify a number of 40,000 employees, over a single year. That is a very large amount of people to add, in a very short amount of time. So it can be a little difficult to look at those graphs and actually get a grasp on where these companies are basically sitting at in terms of their number of employees. So what I've done is I've looked at their growth over the last 5 years and basically broke out the number here. You can look again at the math kind of sitting right here. But what that equates to is Google over the last 5 years has increased their number of employees by almost 100%. So 95.36%, Amazon 184%, Meta 186%, Apple 33%, Microsoft 78%. As I mentioned, I want to go through and rank these companies by how likely, in my opinion, are they to do either additional layoffs or start layoffs. And the first one we have up here is a fairly obvious one. In my opinion, I think Meta is set for more layoffs. So obviously they've laid off around 10,000 employees so far, but they have seen the highest growth on this list. They have seen 186% growth over the last 5 years, which is absolutely insane. And if you think about how much the business has really changed for Meta, the biggest change that they've had is the metaverse. And obviously that is going to warrant a lot of headcount, but is it, to the amount that we have seen over the last 5 years? Probably not. They are also focusing on, monetizing some of their other platforms like WhatsApp and, some of their other social media platforms. And that's obviously going to warrant a few headcount here or there to build out a team. But overall, again, I just think the number of employees that they have added over the last 5 years is just more than, what is necessary. The next two are very interesting. So I actually put Google above Amazon. So Amazon has a lot more, lower pay scale employees where they can hire on a lot of people without adding a ton of additional costs. Google, I did a video about a week and a half ago where I actually talked about Google, and their average pay is around $250,000, which is absolutely insane to me that they obviously have that many employees that are making above that. That's obviously their average. So they have employees that are making above that. They have employees that are making below that, and they're sitting at $240,000, which is just absolutely crazy. They obviously have a lower growth number than Amazon, but Amazon has grown a lot of their businesses in a more significant way. They have grown their cloud business very efficiently, very effectively over the last, number of years. They have also acquired a lot of other businesses that have, contributed to that growth in their employee count. So overall, they, in my opinion, being Amazon, are in a little bit better shape. They probably do still need to lay off a few more people to, get into a more cost-cutting, efficient manner. Google, though, in my opinion, again, is just a little bit further behind in terms of their, employee count. They probably, to run their business, don't need as many employees as an Amazon. But this is kind of the middle of the line where Microsoft could potentially see some layoffs, in my opinion. They obviously added 40,000 employees over the last year, which, again, I don't think from a hiring pool that's already very restrictive that you can find 40,000 just amazing employees that, you really need at your company over a year like that. So I could see Microsoft, laying off a few people, reducing some of their numbers just to keep them down and keep them lower and basically cut costs and make the business a little bit more efficient. But also in the same instance, they don't really necessarily need to. They could kind of keep growing their business, focus on trying to compete more with, Amazon, with Google as being, the number one in cloud and some of these other businesses. So again, in my opinion, probably don't necessarily need cuts, but they could if they, wanted to basically become more efficient. And now would be the time to do it because you see big tech across the board cutting, a lot of jobs. So overall, if they really want to do it, now would be the year instead of trying to wait and put it off, for a couple years down the line. And the last one up here, obviously, is Apple. So Apple, we have seen, they have only grown 33% their workforce over the last 5 years, which is absolutely insane. The only thing that would be worrisome from Apple is, are they keeping up and staying competitive with these other businesses? Obviously, they are trying to grow their employee numbers for a reason. When we're looking at, Meta, Google, Amazon, Microsoft, they're focused on growing a lot of their other businesses. Apple has kind of just been, sitting and chugging along, doing their thing, doing what they're great at. So hopefully, they don't fall behind. If they do, they can obviously ramp up their hiring and really not be in a bad spot. Or, if they really want to cut costs like a lot of these other businesses, now would be the time to do it. But I don't really think they are one that needs to. I think, they can continue along their path and maybe, hire on a few, groups of people. They could hire 1,000 people and focus those 1,000 people just on a couple of projects, and they would still be, far below a lot of these other companies in terms of their growth number of employees. So overall, again, Apple just seems to be in a really good spot, really healthy spot in terms of all these companies, while a lot of these other companies, obviously, they've been hit a lot more than Apple, and that's due to some of these costs that they've added over the last 5 years. So overall, that's kind of just my opinion. I do think Meta and Google are kind of big ones. I think they for sure probably need to keep reducing some of their headcount. Amazon's kind of somewhere in the middle where probably, could, not necessarily need to. Same with Microsoft. They could, but probably don't really need to. And then Apple is almost in the opposite suit where, maybe they actually need to hire more employees, kind of take a more offensive approach to the market and, growing some of these other businesses. Potentially, if they want to get into VR and be competitive with Meta, they may need to, hire on a few more people and get more people, into their company to work on some of these more growth focused projects. So overall, I hope you enjoyed the video. Let me know your opinion down in the comment section below. And if you enjoyed the video, make sure to drop a like down below. And if you want to see more videos like this one, make sure to hit that sub button. And as always, guys, have a wonderful rest of your day.